Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Tuesday, May 28th through Friday, June 1st, 2012, and is sponsored by RealTick. Well, folks, I hope everyone's having a wonderful Memorial Day weekend holiday and again enjoying the extra day off on Monday. Remember, markets are open Tuesday through Friday this week because of the Memorial Day holiday on Monday. All right, bottom line is this. Last weekend's video, if you go back to last weekend, we talked about an ensuing bounce based on major technical analysis and proprietary techniques. That bounce began last week. This is the chart of the SPY, which mirrors the S&P 500. All right, so again, this is an intraday chart showing what happened each day. You can see these lines sloping down. This is Monday, Tuesday, Wednesday, Thursday, Friday of last week. If you go back to the previous Friday, you can see where we closed the week all the way down around the 129.80 level on the SPY. All right, looking at the last week action, you can clearly see we ended higher, although not dramatically higher. Remember, this is a counter trend rally going on right now. This is a counter trend bounce. That means it's going to be a weak bounce. It's not going to last forever by any stretch, and eventually you're going to turn to the downside again, and the markets are going to collapse even further. But last weekend we called for a bounce, and you can see last week we did bounce. In addition, going into this next week, I do expect continued upside at least through Thursday. All right, now again, it doesn't necessarily mean that every single day is going to be up, but I do generally want us to look at those charts at the end of this coming week and say, all right, guys, we were higher. We did go higher through those days. Now, the reason why I'm saying through Thursday is because Friday morning you get the non-farm payrolls number. And the non-farm payrolls number can be a big deal for this market. All right, obviously, the Greek situation and what's going on in Spain and Europe overall, I mean, that's a huge deal as well. But I truly believe that in the short term, you'll get positives out of that, and the market will inch up just a little bit over the course of the first few days next week. Friday, with the non farm payrolls number, is a wild card. And we'll have to look at the charts based on where we are on Thursday. That will allow me to understand where the markets will go on Friday. If you told me we were at certain resistance levels because we rallied all week long, I'd say look for possibly a pullback. If we don't rally that much and kind of stay sideways into Friday, then I might even be looking for a rally on the jobs number. But again, the charts will dictate as they have done. Again, this is just continued analysis based on price pattern and time factors that we used here at InTheMoneyStocks.com. All right, again, there's your last week activity. Big pops Monday into Tuesday, then you collapsed back down, then you reversed again, and you had some amazing reversals. And I have to say that, folks, last week we saw these sharp sell-offs and then big bounces. And the best one was probably on Wednesday right here. Let me zoom in a little bit. And you can see right here how on Wednesday we sold off sharply, and then late in the day, really starting around 1 o'clock or 12 o'clock, the markets reversed in dramatic fashion and actually closed higher on the day. And even on Thursday, the same thing happened again. We started higher, sold off, and then you saw this big bounce into the end of the day, a buy program come into the markets. And this is something we haven't seen for quite a while in terms of at least a couple months since the markets have started their down cycle, where these buy programs have surged and brought the market back up. And again, part of it screams of PPT, Plunge Protection Team, and the Federal Reserve, but the other factors are, obviously, if you have institutions that may know more information like they all do, it's very possible that they were seeing the same things that we were calling for, which is a counter-trend rally here, and they're trying to position themselves accordingly, and once they get a little bit of buying going on, you're going to get a short squeeze, and all these shorts are going to cover, it's going to continue up, and so forth. So if you go to Friday's action, Friday had a little bit of a sell just kind of all day long. We opened slightly higher and just faded most of the day. That's not surprising because no one really wants to hold the market into the weekend, a 3-day weekend, when Europe is going to be open, obviously, on Monday and so forth, and going into Tuesday before the U.S. markets even have one day open after the weekend. So, again, it's just a little profit taking. People just were kind of nervous. It actually wasn't even that much of a sell off compared to what it could have been, which again tells me that we probably do have a little bit of neutral to upside in the markets left before the market comes back down sharply. And the market will, again, guys. Make sure you understand this. We called the cycle top, we nailed it. We've called for this bounce. We nailed it. It's just a counter trend bounce. Again, we position ourselves on the long side, and we've made great money over the last couple weeks doing so. But we're going to be looking to short the market again and make money on the next wave down. And that's the goal. My goal is just to be on the right side of the market. I don't care which side of the market it is. I just want to be on the right side. And you should as well. If you have a 401k, an IRA, or just an investment account, or you're a day trader, your goal is to just make money. You don't care how you do it. You just want to trade and be on the right side of the trade. And that's, again, what our proprietary analysis allows us to do. And we'll teach you all this here at InTheMoneyStocks.com. There's a 7-day free trial you can take. Rock it with the pros, bottom line. All right, let's go to the daily chart of the SPY, which again is essentially the S&P 500 here. One thing I just want to show you guys is how we knew the bounce was going to come in. And again, you can clearly see you have a shoulder, head, shoulder pattern, and there's your neckline. When your neckline broke, based on what we know, we can calculate the target, literally to the penny, of the SPY on a drop of a head and shoulders pattern. All right, that's one of the things we teach you here at InTheMoneyStocks.com. All right, based on that, we knew this was your target right here. And when the market fell into that level, we moved out of our short plays like SDS. I sold my SDS, which is a short S&P 500 ETF when you're long it, and other plays as well like SPG. I was short. We made some great money there as well as some other positions. But once we knew we had completed the head and shoulders pattern, it was high time to move out of our shorts and actually start to put on some longs. And sure enough, that's what we did here, folks. And sure enough, the bounce has ensued. Now, again, it's not going to be a big bounce. You know, you've had a little bit of a bounce up. I do think we have a chance to go up to this level right here, maybe the 20 moving average, but this is my general thought. See this kind of choppy area right in there and this trend line sloping from the low end? That's where I think the majority of the bounce will end when we get up into that kind of 134 to 135-ish area. All right, that would be at least my expectation. Once we get up in that range, I'll start to look for shorts again on the market when price pattern and time dictates. And my members of the Research Center and the Intraday Stock Chat will know, obviously, as I give them swing trade alerts and trades and just everything they need to be able to maneuver through this market profitably and continue to profit. All right, but bottom line is, nice bounce here. And again, I do anticipate it continuing up this coming week, at least into Thursday. And then once we get into Friday, then that's a wild card based on where we are and based on the jobs number. All right. Looking at the charts here, the next wave down of selling after we get a bigger bounce here, I think you go to the 200 moving average, and eventually you will break that 200 moving average. You want a long-term general area of a target? It's right here. Eventually we will go down here, folks, easily before the end of the year, probably within the next 3 months or so, my estimation is. That's at 117 and change. All right, by the way, that'll be over a 20-point pullback. That'll be about a 25-point pullback on the SPY, which is again is basically a 20% correction in this market when all is said and done. All right, again, that is where we are headed later this year, in my opinion, to this trend line. It's a very obvious trend line, too. I mean, it doesn't take a genius to connect those lows from 2009 to 2011 and get that line. Okay? Once we get down there, you'll have an unbelievably good bounce, though. Unbelievably good bounce. You can go long almost anything off of that level. But that's for, as we get closer to that, I'll give trades out on that as well to our members here at TheMoneyStocks.com. Let's take a look at the dollar. Now, the dollar obviously is a big inverse play here. And one thing I was talking about, folks, if you remember here, and first of all, you can see the dollar is trading up into major resistance. I mean, there's a major resistance up here, pivot high from the topping tail going back to January. But one thing I told people during the week, during the week, I do these free videos for you guys just like these on the weekends. And one thing I recognized was a divergence, a positive divergence between the dollar and the markets. And that told me that those late day rallies and the further upside was going to come into the markets. For instance, if you go back to the SPY on an intraday basis, the Wednesday reversal right here, this huge reversal where we were selling, we had an ugly sell-off, folks. Spiders were down like $2, and then they reversed to close positive on the day. That was easily seen if you looked at the dollar action. And the reason why you could see it on the dollar action, because there was a positive divergence between the markets and the dollar. The dollar kept on going higher throughout the course of the day. All right? But the markets were not making new lows. And the markets and the dollar are perfectly inverse. Literally, when the dollar upticks, generally the market will downtick. It's just the way it is. It's the way the computer programs are set up to trade the markets. So what we were seeing on Wednesday, and this is something I pointed out to my members. I talked about in the nightly technical analysis video, which is part of the Research Center as well. And I basically said to them, listen, the positive divergence here in the markets is telling us that this market has more upside to it. And then before you knew it, this monster rally came in the market. Same thing happened on Thursday, and again, the monster rally came in. Not so much on Friday, and you can see the results of that. But overall, it's a positive divergence. And I want to show you the easy way to look at this. All right, if you look at your daily chart of the SPY, all right, the SPY has actually floated up off these lows and is now trading here. Here was the low on the SPY. Now go to the dollar and find out where the low has been on the dollar. The dollar continues to go higher. That's a positive divergence because the markets are bouncing up while the dollar is moving sharply higher. And again, the last time the markets or the dollar topped out and the markets bottomed out was right here. So when the dollar hit this point here, then if you go back to the SPY was at this low. So even though the dollar has gone higher, the markets have also gone higher, which again is a positive divergence, and it tells us again there should be further upside. Again, I know it's a little complex, but again, for those of you that understand divergences, and again, we teach you that stuff here at inthemoneystocks.com, it's pretty understanding in terms of being simple and such. All right, so again, just try to grasp that. Bottom line is, if you go back to the dollar should meet some very good resistance, really anywhere between this area and this pivot high. I wouldn't be surprised to see a week, 1 or 2 week pullback in the dollar. The dollar's gotten extremely extended in a very short amount of time. Even though there is problems in Europe, it still does not mean that a chart will just go vertical forever. There are pullbacks, and my estimation is the dollar will pull back this week from these highs. I do not see it getting through this double top without at least a little bit of a pullback for a week or two. Okay? All right, going on to some other things. Let's take a look at oil, folks. Oil's a big one here. A lot of people are asking me, when do you pick up oil, where the oil levels are? And oil is into some support down here. I mean, you do have a decent amount of support, no doubt about it. Question is it bottoming? Ultimately, throughout the course of the year, gold, silver, and oil will go lower, but in the short term, I do think they all bounce a little bit. Right? When the market bounces, these should bounce as well. And I do think while I'd prefer oil a little bit lower before I swing it on the long side, I do think in this general range, the more I look at it, the more likely we do see a little bit of upside. And again, it's not going to be a huge bounce. I think you're going to get a bounce back from the 34.22 level on the USO here, probably upwards of 36 or so. There's a gap fill right here. So, I mean, it's like a $2 bounce or so on the USO, which is the likely outcome. All right, let's take a look at some stocks, guys. JP Morgan Chase, obviously this one got crushed in that multi-billion-dollar loss. I do think there's more upside in JPM, though. In fact, I'm long JPM, believe it or not. I'm in the money a little bit on it, and I am long. I picked it up right down in this lower range as well. But bottom line is, I still think it's an oversold chart, and if the markets do gain some traction, if things look a little bit better in Europe over the course of the coming days, you will see some of these financials have some pretty solid bounces, and JPM should be among them. So I like JP Morgan down here. My bounce estimation, this would be first target, which would be gap fill right here, which is right around the 35.50 level, and then down to the 200 or up to the 200 around the 36.50. Those are your two targets, target 1, target 2, where I would generally expect JPM to trade back to. All right, taking a look at Apple, guys. Let's take a look at Apple. Apple's had a tremendous bounce. Again, great bounce here. It's making a little bit of bullish consolidation here. I think there's a little bit more upside in Apple to the 50 moving average. Once you get to the 50 moving average, then you have to start, respecting. There's also a trend line. This is the original trend line, but you'll get through this line. See how you connect that pivot high to that pivot high, and it coincides with this high right here. Eventually, you break through that. Once you do that, you're going to go to this 50 moving average. If you get through the 50, then you'll be heading all the way up here. But Apple, to me, once it gets to that 50, it becomes a no play, and then you have to just wait for the setup on the short side. Eventually, you'll get Apple to flush way down again, and the next spot on Apple will be the 200 moving average, folks, which right now sits around 465. It will get there too. There's no doubt in my mind that it will get there. Just a matter, again, remember, when you're investing or when you're trading, folks, it's all about timing. All right, 10 people can go long or short a stock in the same day, and none of them can make money, all of them can make money, or half of them can make money, or one of them. The point is, it's all about understanding the levels of the charts and the time. Timing is one of the key factors you must learn. Many amateur retail traders jump the gun on trades. In fact, we're all guilty of this at some point in our history of trading. Jumping the gun, getting in too early because we had to be in a trade, and then you end up losing. If you know how to read the charts, price, pattern, and time, just those three factors, those are the only factors you need to know to analyze a chart and know, is it going up or down, and is it good risk reward here. We will teach you that here at InTheMoneyStocks.com, folks. All right? Bottom line is, take a look at some of the video testimonials posted lately on our site. Amazing. And these people speak from the heart, and it means the world to me, to be honest, to have them talking like that and so, enamored with the service and so happy with it. Makes me continue to strive to be the best I can be, and me continue to learn every single day as well, and teach them everything that I can learn, and all the proprietary techniques that I come up over the next 5 years, I'm going to teach right to them as well. So in any case, bottom line is this: we're going to continue to nail the markets. The profits continue to flow while everyone else is losing money in this market. We're making money. On the short side and the long side, I don't care. We're going to make money because we'll read the charts correctly. Come join us here at InTheMoneyStocks.com. There's a 7-day free trial. Remember, the Research Center is for swing traders and investors. That's geared more towards them. Day traders are more focused on the intraday stock chat. There's a 7-day free trial to both. You can take one, you can take both of them at the same time. Doesn't really matter. It's up to you guys. We are here to help. We are here to make you money. We're here to teach you proprietary techniques. All I ask is a mind that is open to learn and open to strive for the best. Take care, guys. Have a great holiday weekend. I look forward to seeing you all in the No Hype Live broadcast tonight, which is part of the Research Center, and again in the chat room. And all the alerts that I'll be putting out in the next couple days for swing trades will be there for the taking and the profits. Take care, guys.